everyone, to our investing chat. Today, we're diving into how beginners can kickstart their investing journey in a clear, simple way.
I'm excited, uh, really excited to dig into this. What's the first big point we're covering?
The very first step, actually, is to nail down your why and when for investing. Before even picking stocks or bonds, you've got to ask yourself, why am I investing? And how long can I wait?
That's essential. Yeah, like a roadmap for your money, right? It's like planning a road trip.
Exactly. It's like think of it as choosing the right car for your trip. You wouldn't pick a sports car if you're going for a long, comfortable journey. You need clarity on your destination and how long you'll be on the road.
Yep, and this why might be saving for a down payment, retirement, or even that dream vacation we've all fantasized about, right?
Precisely. And your when, the investment horizon, is just as crucial. If you have 20 years, you can ride out the ups and downs. If it's just a couple of years, you need more stability.
Yeah, stability is key. Moving on then, what's our next critical step?
Step two is all about matching your money to the right assets. Now, here's where many get confused, thinking they must decode Wall Street's secret language.
Right, which is actually a big myth.
Yeah, it's like you don't need to be a finance wizard. You just need to find assets that align with your goals. Short term horizons might call for high yield savings accounts or safer bonds, while medium term goals could lean towards growth stocks.
Often people get tempted by the hype of, say, high flying tech stocks for everything, even when their horizon is short.
Exactly, and that's dangerous. It's like shutting all your eggs in one tech basket.
Diversifying is smart. So, if I understand correctly, the idea is to tailor your asset choices, mixing things like ETFs, dividend payers, bonds, etc., to best fit your goals and timeline.
Right on. Imagine it like a buffet. You pick and choose a little bit from different sections so you're not stuck with just one dish. It helps spread out risk and can lead to more stable returns.
Uh, and while we're on the topic, don't you think sometimes people might over diversify? Like too many selections that muddy the waters rather than clarify?
That's a valid point. Here's where personal research comes in. You don't need dozens of different things, just the right mix for your specific why and when.
Yeah, makes total sense. That balance is critical. Now, what's the third step?
Step three is about keeping your investments alive with regular quarterly check ins. Even after you've allocated your assets, you can't just treat your portfolio like a time capsule. It needs regular updates.
Yeah, you have to monitor and adjust, right? Kind of like checking and tuning a car engine before a long drive.
Absolutely. Think of it like checking the oil on a car. Every 3 months is a good interval, frequent enough to catch potential issues, but not so frequent that you become obsessed over daily market swings.
It's all about balance. That seems like a manageable habit. I can imagine setting a recurring calendar reminder helps keep you on track.
Definitely. Many beginners have learned the hard way. Ignoring check ins can lead to panic selling at the wrong time. Regular reviews allow you to rebalance, lock in gains, or reallocate as your financial situation changes.
And it's not just about monitoring losses, right? It's also about recognizing when an asset is exceeding expectations.
Exactly. And that's where having clear goals from step one helps you measure progress. For instance, if a growth stock has tripled, maybe it's time to sell some to secure profits. Or if your life situation changes, like welcoming a new family member, you might want to shift to more stable assets.
I like that analogy of tuning a car. It really puts into perspective the proactive yet low-key approach to managing investments.
Right, it's about maintaining that engine so you keep driving forward without unexpected breakdowns.
Exactly. So overall, the idea is that investing doesn't have to be daunting if you break it down into these three steps: knowing why and when, picking the right assets, and keeping on top of things with quarterly check-ins.
Yes, that's the essence. Investing isn't about a huge leap into a mysterious world. It's about clear, deliberate, and simple steps that you can stick to.
Right again, and along the way, you build confidence and a solid foundation rather than getting overwhelmed by jargon or quick fix schemes.
Exactly. It's turning confusion into confidence. Starting small, learning as you go, and being methodical about how you approach your money.
Some might say that this approach oversimplifies investing, ignoring more complex factors. What do you say to that?
That's a fair critique. Sure, investing can be much more complex at advanced levels, but for beginners, this simplicity is its strength. It demystifies what can feel overwhelmingly complicated.
That's a good point. It reminds me of how even in cooking, you start with basic recipes before trying to master gourmet dishes.
Exactly. It's like, first you learn to boil water before tackling a five-course meal.
This approach gives new investors a clear, actionable plan without all the noise of advanced strategies.
Yeah, and that's where platforms like Investling come into play. Their courses help break down these steps further, providing tools and realistic examples.
Right. And they turn that I don't know how into I've got this, which is so motivational. So, if someone is sitting there, overwhelmed by all the financial jargon, they should start with clarifying their personal goals, match their investments to those goals, and then check back every few months. Would that be the right takeaway?
Spot on. This process empowers you to take things step by step rather than feeling paralyzed by information overload. It's less about predicting the future and more about adapting smartly as you move forward.
I love that perspective. It demystifies investing and makes it accessible and fun even.
Right, it's like an adventure. With a clear map and regular pit stops, you're set for the journey. Thanks for such an engaging discussion on turning investment myths into simple steps everyone can follow.
Absolutely. Thanks for breaking it down so clearly. Cheers to smart and confident investing for everyone.